Hey, this is Matt from InvestiQuant. Today is Monday, March 22nd, 2021, and Friday was options expiration day. We ended up with a doji-like candlestick. The market opened lower, it tested lower initially before finding some pretty aggressive buyers, but they ended up failing into the close of the session, and it ended up closing just below the opening print, kind of creating a doji-like candle. But this morning, we are seeing the markets push higher ahead of the open. So what we'll be looking at today is what has happened historically in a similar market environment when the market is gapping up the day after options expiration day. So let me go ahead and set that up here and discover with all four instruments. The setup that we're going to be looking at is based upon entering the market long at 9:30 a.m. Eastern Time, exiting at the close, which is 4:15 p.m. Eastern Time. Next, I'm going to go to this opening filters library, and I'm going to say that the market is trading higher at the open. So I'm going to select gap up from the gap direction category. That just means that the open is above the prior session closing price. That is true currently, and I'm assuming that's going to be true at the open as well. Next, I'm going to go into the indicator section and put us in a similar market environment. So Friday ended up closing weak relative to the entire week, and it also closed below a 10-day moving average. So we are below a 10, but above a 200-day simple moving average. So a little bit of a weaker bullish environment. So I've got that selected. Lastly, I can come into the market events section, and I can say today is the day after options expiration day. I can do that by going to the active today section. That bottom option for the day after options expiration, that comes from this category right here, day after market events. Now I can click view results. And here we go. These are the results of going long at the open, which is 9:30 a.m. Eastern Time, exiting at the close, which is 4:15 p.m. Eastern Time, when you gap up the day after options expiration day in a similar market environment, which I have is below a 10-day simple moving average, but above a 200-day simple moving average. Historically, the S&P has 25 samples, the NASDAQ has 31, the Dow 26, and the Russell 30. If we look at the win rates on them, we've got a couple that are very neutral and a couple that are slightly favored. So the S&P is coming in the strongest, with 64% of these have closed above the opening print on this session. The NASDAQ and the Dow are very neutral here. There's no real discernible edge in either direction there, and then the Russell is just slightly favored at about 57% of these ending up with what would be a green daily candlestick. If we go to the average win, average loss, the average win has been larger than the average loss in the S&P. That is also true for the NASDAQ, but it's not the case for the Dow, and it's not the case for the Russell. So they're split evenly 2 and 2, with the average win being larger than the average loss in the S&P and NASDAQ, and the average loss being larger than the average win in the Dow and the Russell. So overall, I'm not seeing a real strong edge. For whatever reason, the S&P has been a little bit stronger than the others, but it's not like this day has a very consistent edge in one direction or the other that is being seen across all four instruments. So hopefully you found that helpful. Good luck today. We'll see you next time.